Hey traders, this is Mike Sir here. Welcome back to my channel. In this video, I'm going to continue my series of showing you what tools I use on a daily basis to analyze the financial markets. So for this video, I'm going to teach you some of the most profitable chart patterns that I look for and how you can profit from the chart setup. So let's get started. So first off, let me explain to you what chart patterns are. They're basically graphical formations created by the movements of stock prices on a chart, and these formations help you anticipate the future price direction of a stock. So if you're able to identify, let's just say, a specific chart pattern, then you have a higher probability of making money on the trade. The main reason is you have an idea what price direction the stock will go towards. Now, there's some traders who will say, well, chart patterns don't work or you don't believe in it. Well, my response to those people is you're not wrong. Now, chart patterns aren't 100% accurate and they're not the holy grail. However, what chart patterns can help you is it's kind of similar to like trend lines. It helps you identify a low risk trading opportunity to buy or sell at that particular point. There are literally hundreds of chart patterns out there, but let me share with you a few profitable chart patterns that I look for. Now, the first chart pattern I'm going to talk about is called the base breakout. Now, this is my favorite chart pattern because it's the one that can make you a lot of money. And it's essentially a strong price movement through a level of price resistance. And the stock price usually heads higher after breaking above resistance. Now, in this pattern, you want to look for, or you want to wait for the price to hit the resistance level a few times. And then once it finally goes above the resistance level, then you buy. Now, if it goes below the line, which is now support, then you exit with a small loss. So here's a chart of Barrick Gold. And the part that I want you to focus on is look at this price. It's actually been going down. Now it starts to base, right? You can see here, and especially right here. Right, you can see that this is the level of resistance, and then you can see finally it breaks above, and then now it becomes support. And then once it is able to hold the support level, then it skyrockets in price. The opposite of the base breakout chart pattern is the base breakdown pattern. Now, this pattern is a strong price movement through a level of price support. And the stock usually heads lower after breaking below price support. So for this pattern, what you want to do is you want to wait for the price to hit this price support level a few times. And then once it finally goes below the support level, then you sell or short. And if it goes above the line, which is now resistance, then you exit with a small loss. So here's a chart of the Royal Bank of Canada. So the key aspect here is you want to see the price move up very, very strongly. You can see here, and then it starts to base sideways, right? This is a little bit false breakout here, but it basically bases, right? And then it breaks right here. And then you can see that this level of support now becomes resistance, and then it falls much lower. So the key aspect in terms of looking for these price levels is a big, strong move up, basing sideways, okay? Hence the chart pattern basing, break down, retest, and then head lower. The biggest reason why I like these base breakout or base breakdown patterns the most is because once it clearly breaks above or below those levels, then it usually goes a lot higher in your direction. Now, in fact, the world record trader Dan Zanger says that these base breakout patterns are his favorite as well. Now, I made a video about him and you can check it out at the end of this video. Before I share other profitable chart patterns with you, please stick around to the end of the video as I will randomly pick several charts, identify the chart pattern for you, and tell you what price direction it's going to go towards. Okay, let's talk about one of the most common types of chart patterns that you will see on the chart, and they're called triangle chart patterns. Now, there are three types of triangle chart patterns. One is called ascending triangle, another one's called descending triangle, and another one is called symmetrical triangle. First, let's talk about the ascending triangle. Now, the ascending triangle, it consists of one trend line drawn horizontally at a resistance price level, while the second trend line connects a series of higher lows. it's a bullish pattern, meaning that we anticipate the price going up. Now in this pattern, you want to wait for the price to hit the resistance level a few times, and then once it finally goes above the resistance level, then you can buy. Now if it goes below the line, which is now a support line, then you exit with a small loss. So you can see here on this chart here, it hit this level once, twice, three times. You can see that this is a very, very strong resistance level. You can see here a series of higher lows. So low here, higher low, higher low, higher low. And then once it breaks out here, this is when you get in to buy, and then you can see the price go up there. The second type of triangle pattern is called a descending triangle, and it basically consists of one trend line that connects a series of lower highs, while the second trend line is drawn horizontally at a support level. So it's a bearish pattern, meaning that we anticipate the price going down. So in this pattern, you want to wait for the price to hit the support level a few times, and then once it finally goes below the support level, then you sell. Now if it goes above the trend line, which is now a resistance level, then you exit with a small loss. So you can see here, in this chart here, we are drawing this, extending this trend line here. We can see lower highs, right? High here, lower high, extend it all the way out. This is the support level. You can see here, here, and here. And again, this is where once it breaks through this line right here, this is when you sell. And you can see the price head lower there. The last triangle pattern that I want to talk to you about is called a symmetrical triangle. And it's a pattern that shows a period of consolidation before the price moves up or down. Now, a symmetrical triangle pattern is identified by drawing two converging trend lines that connect a series of lower highs and higher lows. So in this pattern, both trend lines act as a barrier that prevent the price from either going higher or lower. So once the price breaches either trend line, a sharp price movement should often follow. So if the price goes above the upper trend line, then you buy. If the price goes below the trend line or the lower trend line, then you sell. So here's an example of a symmetrical triangle. You can see here that the price is getting tighter and tighter, right? You can see this range is getting tighter and tighter. So either it breaks below this lower trend line here is when you sell, or it breaks above this line here is that where you buy. So you can see here, this is the trend line. You can see a high here, lower high, extend it out. You can see a low here, higher low, higher low, higher low. So this type of pattern essentially can go either way. It can be a bullish pattern once it breaks above here, or it can be a bearish pattern once it breaks through this lower trend line here. Before we take a look at the charts, I would like to let you know that this video is sponsored by Tradeview Markets. They are an online trading platform that I personally use for trading the Forex markets, futures, and stocks. Now, they have an excellent reputation in the industry with 4-star reviews on Trustpilot and Forex Peace Army. Now, currently, they're offering a 15% deposit bonus for all subscribers of my channel. So all you need to do is click on the special link in the description box below to open up a new account. Okay, let's choose some random charts and draw some chart patterns. So here's a chart of JP Morgan and Chase. And what I see right away is I see a potential descending triangle. So if we extend it right here, and we can see a high here, a lower high. So this is a small mini descending triangle, just basically based on looking at this price chart right here. You can see a high here, a lower high, and then you can see a strong level of price support. So what I would do is there is a support level around 146.43. If it breaks through that level, then you look to sell. So here's a currency chart. This is the US dollar versus the Canadian dollar. And what I see right away is you can actually see that there was a base breakout right here. So you can see the Canadian dollar has been falling. And then you can see here, basing, and then a breakout. So what I anticipate is, especially this long downward trend, then a basing, and then going higher here, is I would not be surprised if the US Canadian dollar reaches a much higher level. So this is kind of one of the things that I, again, want to repeat again. The reason why I like the base breakout patterns is after a long period of decline, once it creates a base, then once it breaks out of that base, then it can go much higher. So let's take a look at some cryptocurrency charts. Here is the Cardano versus the US dollar chart. And again, just looking at it right away, you can see that there is a strong price support level right here, right at a little bit over $1. And what's kind of concerning here is the price is actually making lower highs. So right here, if we were to extend this out, so we have highs here, lower high, lower high, lower high. So based on this type of pattern, if it breaks through this level of support right here around $1, then it will probably go much lower. Now, the only thing here is if it does break above this line here, because this is a descending triangle pattern, if it breaks above this line, then this whole pattern is not valid anymore. So that's why I meant sometimes these chart patterns are not 100% reliable, because based on this right now, the price should go down. But if it invalidates this trend line here, lower trend line, and it does go up, then I don't see this as a descending triangle pattern anymore. So I wouldn't use that as a pattern to predict that the price will head lower. Thanks for watching. If you like this video and want to watch other videos where I show you all the tools that I use on a daily basis to analyze the financial markets, please click on the left for more videos and click on the right for the full playlist. I'll see you in the next video.